Welcome to the weekly Global Market Outlook, your go-to source for navigating the financial markets. I'm Tolga, and today we are diving into last week's market movers from the U.S. job gains to global trade developments and preview what's ahead for the week of June 9th. Whether you are a trader, investor, or finance enthusiast, stick with us for actionable insights. Let's get started. Last week, global markets showed resilience despite mixed economic signals and ongoing trade uncertainties. In the US, stocks post their second consecutive week of gains, with the S&P 500 up 2%, Nasdaq up 2.18%, and small cap Russell 2000 leading at 3.19%. Tech stocks surged driven by AI optimism and Meta's 20-year deal with Constellation Energy. However, defensive sectors like consumer staples and utilities lagged, down 1.5% and 1%. The US labor market added 139,000 jobs in May, beating estimates, but downward revisions and rising jobless claims at 247,000 signaled cooling. Treasury yields increased and the DXY dollar index rose to 99.2, showing weekly dollar strength despite broader bearish dollar sentiment. Crude oil jumped 6%, hitting a 6-week high. Globally, European stocks rose, with the Stoxx 600 up 0.9% as the ECB cut rates to 2%. Eurozone GDP growth hit 0.6% in Q1, but German and French industrial output disappointed. In Asia, Japan's Nikkei fell 0.59% with the yen stable at 144. Chinese stocks gained with the CSI 300 up 0.88% and Hang Seng up 2.16%, fueled by stimulus hopes and 90-day U.S. tariff reprieve. U.S. China trade tensions eased slightly after a positive Trump-Xi call, boosting sentiment. Market volatility eased with the CBOE weeks dropping to 16.8, signaling calmer investor expectations. Let's look at the week of June 9th with key events that could sway markets. Monday, June 9, Chinese CPI is expected to show deflation at minus 0.2% year-on-year, with trade data likely reflecting a wider surplus due to strong exports. Japan's Q1 GDP is projected to confirm a 0.2% contraction, potentially pressuring the yen. Apple's Worldwide Developers Conference may impact tech stocks, though AI updates could underwhelm. Tuesday, the UK jobs report may show unemployment rising to 4.6%, with wage growth steady at 5.5%. Australia's NAB business confidence and Westpac consumer confidence surveys will gauge sentiment amid tariff concerns. Watch for forex volatility, especially in sterling and Australian dollar. Wednesday, June 11, the US CPI report is critical, with headline inflation expected at 2.3% and core at 2.9% year-over-year. Tariff-driven price pressure could push yields and the dollar higher. The UK's spending review may signal fiscal constraints, impacting yields and sterling. Thursday, June 12, UK GDP is forecast to contract by 0.1%, reflecting tariff-related slowdowns. US PPI and weekly jobless claims will provide further clues on inflation and labor market trends. Expect bond market sensitivity to these releases. Friday, June 13, the U.S. Michigan Consumer Sentiment preliminary reading is projected at 53.5, up from 52.2, but tariff uncertainties could weigh on confidence. Eurozone trade balance and Italy's industrial production data may influence European equities. Ongoing U.S. tariff talks and the Trump-Musk rift could add volatility, so stay nimble. That's your global market outlook for the week of June 9th. Key takeaways: US markets remain resilient, but cooling labor data and tariff risk warrant caution. Globally, watch Chinese trade data and US inflation for directional cues. What are your thoughts on these developments? Drop them in the comments below, and don't forget to like, subscribe, and hit the bell for weekly insights to stay ahead of the markets. I'm Tolga, and I will see you next week.